Was great. Back with another video. You already know it's your boy Eddie One Take. Today's a beautiful day. It's a day we never seen before and a day we'll never ever see again. This is T4T Trading for the trappers. Take risk and profit. All right, in this video I'm going over Fibs. This is part 2 for Fibs to the downside. In the last video we did bullish movement, what Fibs will look like for a bullish movement. So I see a beautiful downtrend here. I'm gonna mark off the highs and the lows for I'm gonna mark off the highs and lows to identify the current range that we are in. Give me a second. I got my magnets on, so tweaks on me sometimes, but here we go. Put my crosshairs on. All right, cool. So I got this high up here. There's nothing to the left, nothing to the right, and you see the price starts dropping, and then I will take this low right here before the price starts coming back up. Right here. So we've identified our range. And once we do that, then we can go ahead and show you how Fibs is used specifically for getting entries. All right, so we can see that this is a clear downtrend, and that is identified by these lower lows and these lower highs, lower lows, lower highs, lower lows, lower highs, all the way down. Now, if we want to use Fibs to get an entry, we want to follow structure, and let's say we want to get this entry right here, right? We have a gap in the market. Right here. You can see how this engulfing candle closes above this engulfing candle right here, closes above these last two candles, and it created some disproportion in the market. Then the price went up to create these highs, and it came back down into that zone, into that gap, right? So that's why we have this motion going back up. Now, on the way down, when it did that, it took out this low. When they took out that low right there, we'll identify that with a red horizontal line. When they took out that low, the algorithm kicked in per usual, and they started going back up. Now, how would we have caught this move? Well, here was the first low that was broken to show you the change in character. Sometimes you might see that as Koch in different places if you look at charts, but that stands for change in character, meaning the price characteristic was moving up, and then the characteristic changed when it closed to the downside. So we have a change of character, break of structure here. Now, we want to measure this retracement in order to catch this down move. So let's put this on replay real quick. You can get this in the paid version. Let me know if did my shit update? It should have. Current plan. All right, yeah. So hold on one second. Let me save this and reset. All right. Hold on. There we go. There we go. All right, cool. So I don't know how to get this big replay watermark off the screen because it's a little annoying. I really don't know how to do that. All right, I'll figure that out. But we can see that this price comes down and it breaks this structure. So this was the real change of character right here. This was the change of character up here, right? We have a high, then a low, and then the price breaks through that, right? This was the change in structure. So or break of structure to the downside. So now that we got this break of structure to the downside, we can see that this low gets broken with a disproportionate candle. That's market structure. Those two things, liquidity and disproportion. Here's liquidity. Here is disproportion. So when disproportion happens, it leaves a gap in the market for the banks, market makers, and people with the most capital to come in for a better price, right? So let's watch what happens. Okay, see how they shot up, made that high, and then they came right back down into that zone. So this filled this gap, and this is the rejection of this gap from wanting to keep going up at this current time period. So stay with me. This is all going to come together on how Fibs works for a sell. Now we see price broke below this low. The algorithm kicked in and price is starting to move back up. They came to retest this zone after they showed us they didn't want to keep going up. This was the retest of that zone and they rejected. They went to retest it again and broke below this structure here, broke below these lows with a disproportionate candle and consolidated here, right? Building up orders to the buy side and the sell side. So when we see this, they're going to take out one side and then go the other way. As we can see here, they created a disproportionate candle breaking below these lows, coming back into a zone, and then because it came back into a zone, it had this reaction, had a strong reaction. That's how you know it's a solid zone. So now that we have that reaction, right, price comes back down, fills this gap a little bit more, closing below this low, taking this liquidity. But they never go below the zone, right? So they're holding at this area where they made this gap. If the price wanted to keep going down, it would have done this, right? That's what it would have done. It didn't do that. So now that we see the price is starting to break above highs, we want to pay attention. So this wicked, but they never took out these lows, all right? So you could have started to draw your fibs out already, which I'm about to do right now. From the last high that it made, the body of the last high that it made, all the way down to the last low that it made before it starts coming back up, right? So this was the last high before it broke the structure to the downside. And this was the last low before it started coming back up. So let's mark that off. Now what we want to do is wait for our golden retracement zones to get hit and give us a discount, right? So multiple confirmations would be if the price comes back into this golden retracement area or gives me a discount, coming back into this zone. If I get some type of market pattern, that's 3 confirmations already. Plus the break of structure and retest is another confirmation. I'm good for the sell. If it breaks through this, then I know the sell is not valid. So let's watch what happens. So price came back to that structure zone and it pushed away. So this was probably some type of news or something. And it gave price a wick on both sides, but they did come back into this zone. So let's watch what happens. Price gives a bullish candle, bearish, bearish. Still not breaking below these lows and not breaking below these lows. So we can see price goes all the way back into the 618, right? So now we're really looking for sells because we got multiple confirmations. We got an order block here, a 1 hour order block. Price came to this area and touched it multiple times. It's in my golden retracement zone. And this is after a break of structure and retest. So let's see. So price gave us a 70% discount, and I'm still on the hour time frame, so we would have been able to snipe this on smaller time frames, but this is starting to look like it's painting an M, right? Which is that would be another form of confirmation. That's more confirmation that we can get in this trade for a sell. Now we just need some type of engulfing candle. So we see that this candle came down to fill up this gap, right? On smaller time frames, you'll be able to see how this came down to fill this gap basically, and they threw a wick, right? They didn't close below it, they just threw a wick. So still got fibs drawn up. Now they gave us a 70% discount 2 times. This is 8 in the morning, 7, 8, 9, 10 in the morning, right? So we see this 10 in the morning New York time frame. We're gonna see some market patterns, and look at these bodies, right? These bodies are basically at even sizes, and this wick just took out all of these highs that it created before. This high right here and this high right here, it just took it out, right? But they didn't close with a body above there, so we're still waiting, right? We get a little doji or indecisive candle. We don't know if it wants to go up or down. We're still waiting for confirmation. We are heavy to the sell side though. Look, price gave you a strong 70% discount, right? And they took out this high, but it didn't close above this high with a body. So then they start rejecting, right? Now, if I'm seeing price go up into my 618, my golden retracement zone, right? Go to my 70% discount, even my 80% discount, and start coming back down, then I know I can get ready for a sell for sure. So I'm getting the price coming back into my 618. Let's see what this next candle does. Still giving me a discount, right? At this point, I would wait. I would probably wait for Asian session. So here, I'm definitely sure on a smaller time frame we would be able to find like good positions for a sell. But let's just say hypothetically, where is my buy and sell button? Hold on one second. No buy and sell. Oh, here it goes at the bottom. All right, so let's just say we hypothetically sold right there, right? We will put our stop loss above this high, and we will put our take profit at TP1. If you're confident, you could go for TP2, right? So on this trade, you would be risking $287 to make $1,800. So let's see how this trade plays out. And we're still doing this from the hour time frame. We're not even on the entry time frame, but I'm just showing you fibs for entries. So we would have been in a little bit of drawdown, but price is still at a discount compared to where it was up here. Now it's going back in profit a little bit. Now we're in profit. Drawdown, profit, extreme profit, right? So at this point, we would have probably seen that and brought our stop loss in profit. So we're not risking any money. And then let's see how the rest of the trade plays out. Big engulfing candles creating disproportion in the market, breaking below these lows, liquidity and disproportion. Price came back to this zone, right? Filled up this gap all the way. It didn't fill it all the way here. It just retested some of it, but they came back and filled it all the way here. We're still in profit. Big engulfing candle to come take out this low, and our TP1 and 2 got hit, right? So that's how you would use fibs. I'm gonna do one more example. I'm not gonna draw everything out though, but I'm gonna do one more example just to show you over and over. Like fibs is definitely a strong confirmation tool. Let me find another good downtrend. All right, this for example, this looks like it was almost 100% off. All right, so you got this move coming down, breaking below these lows, right? And then again, the algorithm kicks in. Whenever they take out a major low, the algorithm is going to kick in. Look at this big engulfing candle that left a gap. This was probably news or something like that. Whenever you see these wild ass candles, it's usually news, right? And it's a gap that has to get filled. So let's say this was the movement down that broke the structure, right? It was already in a downtrend, so it was kind of like a continuation. But let's do it 2 times. We'll do it from this high to this low before it started coming up to see how much of a discount it gave us. From that high to that low. The body. Not the wick, but the body. So we see it gave us a 50%. Look at how it plays right in that golden retracement area. So when you're starting to see this and you're getting market patterns, see that, you'll see an M, right? Here's another M. It's ugly, but it's an M. Once you start seeing that, you could take your sell. Didn't go to TP1 yet, but you would have targeted the lows, right? And then it came back up and gave you another opportunity to make way more money, right? So you see that this would, you could have definitely swing traded this all the way down. And why did it stop right here? So if I mark this off and we look in the past, we can see that there was a low right here. And the price did not take the low out. This was an order block. The price did not take this low out. So that's Fibs in a nutshell, man. It just is going to give you the best area for a retracement when the price retraces. So let me see if I can find one more example for your eyes for the downside. Okay, we just did this. Cool. Let's just say you want to catch this move, right? Price is already showing bearish momentum, right? It's already creating lower lows and lower highs. But then you have this push up, right? This push up takes out these highs, but it doesn't take out this one, right? And then it drops and it breaks structure to the downside. So let's mark that off so we can see it. That's the structure right there. Broke structure to the downside. Since we're already here, let's identify this gap that the market creates. From there to there, at that point in time, there's a gap in price. And you can see how price bounces from that gap, comes back to that gap. Look at how the price plays, right? They threw a wick all the way down here. And on the smaller time frames, you'll be able to see that this was just for them to come in for a better price to buy it up before they sold. So a couple of things here. This gap on the way down gets created from the disproportionate candle in price. So we're going to extend that. That's one indication, right? Look at how price plays at that gap. That's one indication. So we got to break a structure, retest, price fill in the gap. That's 2 confirmations. Let me grab my Fibs. From this high, last high before it broke the structure, to the last low before it started coming back up. Right there. And then I also see market patterns in here. Beautiful little M, right? Triple top, little M. Head and shoulders, really like a little baby head and shoulders, right? And if you would have seen this, look at how here's your entry in your golden retracement zone. If you was a sniper, if we drop down on a smaller time frame, you could have got this early, 80% off, 70% off, 60% off. Anywhere in here, you could have took your sell. Taking your short anywhere in there. Where would your stop loss be? Above those highs, or above those highs if you wanted a tight stop loss, but I recommend above those highs. And then TP1 is at 2.7. TP2 would be at 618. So you would be risking 42 pips to make 130, which is still, it's the reward, 3 to 1. So if you put in $1, you're gonna make 3. Now let me see for right now, currently, right? Look at this price movement. It's moving up, and let's just say you're bullish from the higher time frames, right? So you expect this price to keep going up. What will we do here? Put this here to identify the gap that got created in price, and then this is the last low here. Did this break the structure yet? So this is the last low here before the price broke the structure, and it's looking like it wants to come back down. All right, cool. So if I want to get in this for a buy, first of all, I would have identified like some zones here. Like I see this gap, and I'll do this really quick to end this video. I'll do this gap. Where price is, I think price is there now. All right, yep, that's where price is now. So it could break through this level of resistance, or it could shoot back down. So I also have a high right here, and this high would be my potential target, because at the highs and lows are liquidity. Liquidity is anybody pressing buy or sell in the market. So this is what the potential trade would be like. I would expect them to give me a discount, closing up this gap, come in anywhere from 80%, 70%, 60%, but let's just say we want to see it come in our golden retracement zone. TP1 would be here, TP2 would be here, and that's what we would be looking for, especially if we think this price is going to be bullish. They're at a zone already. They're going to retrace a little bit, filling up the gap to keep shooting up. So I'm looking for that personally. Let me see if there's anything else. I think that was it. I know I seen a move yesterday that I used Fibs on. I think it was this right here. What was the move? I think I got it somewhere here, but I use Fibs. Like even something as simple as this, right? Let's say you missed this move. You see this gap here, but this gap probably never comes back to get filled. It's another gap here, and that's where they're holding. So once you see this many touches at a gap, it's safe to say that they don't want to keep going down to lower gaps, especially at certain times. So we got structure, support structure right here. Price broke above, and it's not going down below. So then we see highs get created here. And then the price trades above those highs, right? So when it trades above those highs, the algorithm kicks in because they took out these highs, and then it starts coming back down. So if we wanted to catch this move, how would we use Fibs? From the last low that the market created right here, the body of it, to the last high that the market made before it started coming back down, right? So before this price broke the structure to the upside, here's the structure right here, a little baby structure, multiple touches. Before the price broke to the upside, this was the last low, this was the last high. And where did the price come back to retest? It gave us a 70% discount, 80% discount multiple times. 70% discount, we could have gotten it somewhere in here. Right, let me just drop down to a small time frame and not end the video, just so we could see how we would have been able to catch this move. What time is this? It's Asian session. Beautiful 7:30 takeoff. They never broke below these lows. They came in and filled up some of this gap right here on a smaller time frame, and you can see how, according to my Fibs, once it starts breaking above 618 after all of this, my 618, my 50, the sniper entry was down here. You could have gotten down here for sure. The safe conservative entry is right here. above the 618, especially above the 50, you being super safe. If the price closes with a body above the 50 after coming down, you're super safe. Your stop loss would be below that low or below the candle where you just got in at, but give yourself some room, so below the last low. And then take profit 1 would be at the 2.7 or this last high right here. TP2 would be at that 618. So that's how we caught this move. We rolled this move. No, I caught it over here. This was the move that I caught yesterday and just swung it all the way up, like over 100 plus pips. But you can see how simple it is to catch fibs. Every time you get a high created in price and it breaks, every time you get a new high created in price and your bias is that you want to continue to buy up, then you would bring your fibs out to measure last low before this price moves up to break the structure to the last high. Price comes back down to our 50%, gave us a 50% discount, and then it went to our TP1. Sometimes it might not always go to TP2 right away, so being safe, responsible, set a TP at TP1, or set your stop loss there and trail it. But yeah, that's it, man. Fibs to the downside. I hope that made sense, man. If it made sense, let me know. Drop a comment. You already know it's your boy Eddie One Take signing out. All we do is numbers trade for the trappers. Take risks and profit. That was Fibs, the intro to Fibs on the sell side. You already know. Let's get this.